Bulls say. We don't think Kraft Heinz will pursue a hostile, and potentially costly, tie-up, as evidenced by its decision to quickly end its bid for Unilever in 2017 and walk away from a rumored bid for Pinnacle Foods in 2018. The opportunity to extend the distribution of Kraft's fare across Heinz's more established international network stands as a means to aid its sales prospects. Kraft is less penetrated in alternative channels like club and dollar stores relative to peers, which management pegs at 10% to 15%, and we think these channels afford another avenue to bolster top-line growth. Bears say. Kraft Heinz wrestles with inflationary headwinds in relation to higher commodity costs as well as freight and logistics. Despite its rhetoric, we've yet to see evidence it's willing to sacrifice margin to up its brand spend and support its retail relationships, and ultimately its intangible assets, over a longer horizon. As evidence of its eroding competitive position, the firm incurred more than $16 billion in impairments since the final quarter of fiscal 2018, partly stemming from its Canadian retail business, its Oscar Mayer cold cut line, and its Kraft Natural Cheese Mix. Analyst Ratings. Buy, 14%. Hold, 77%. Sell, 9%. Market cap, $34.34 billion. Average volume, 8.48 million. Dividend yield, 5.69%. Wells Fargo. Bulls say. Wells has a history of prudent underwriting, and we are probably closer than not to a turn in the credit cycle. Wells Fargo's retail branch structure, advisory network, product offerings, and share in small and medium-sized enterprises is difficult to duplicate, ensuring that the company's competitive advantage is maintained. Wells offers the scale advantages of a money center bank without the risks and volatility associated with extensive capital markets operations. Bears say. Wells has been on defense while its peers have been on offense, potentially damaging the positioning of Wells franchises over the long term. COVID-19 will be devastating for the economy and likely devastating for the banks. There is no way to know for sure how hard the banks will get hit or how bad things might get. The fraudulent account scandal will permanently damage Wells Fargo's brand and fracture its long-standing relationships with customers, and the bank still has numerous consent orders outstanding. Analyst Ratings. Buy, 13%. Hold, 71%. Sell, 17%. Market cap, $135.77 billion. Average volume, 41.15 million. Dividend yield, 6.14%. As always, be sure to let me know your thoughts down in the comments. Be sure to smash that like button. Thank you so much for tuning in, and I will catch you in the next video.